Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today. We greatly appreciate being with you on a weekly basis and essentially, and we've been doing this for the past 5 months. We always learn a lot through your questions, and we've got another fantastic program for you today. So let's get right into it. Let's cover a couple of housekeeping items. You can earn CPE. Just click on the pop-ups that will appear throughout today's presentation. At the bottom, there's a toolbar where you can access the materials for today's event. You can ask questions, and you can download your CPE certificate. If you don't download it during today's session, you will receive an email at the end with information on how you can get it. So let's get into today's program. We've got a great group of presenters. With us is a practitioner today, Dixie McCurley. She's been with us before, and she's going to talk about her experiences around the PPP forgiveness process, as well as look forward at what she's talking to her clients about related to business relief going forward. We've also got Carl Peterson with us. Carl Peterson is out there talking to small firms every day, and he's going to bring us the latest from what they're saying. And we've got back with us this week Lisa Simpson, and Lisa is going to be giving an in-depth review of some of the latest guidance that's come out from Treasury and SBA. So here's the agenda. We're going to kick it off, just recap of some recent town halls, hit on some of the top questions. So I ask you to refrain from asking questions until you see some of these FAQs. We're going to then talk very quickly about the political landscape. Last week, we had an in-depth discussion with Senator Young, so we'll be spending less time this week on the political information. But we're going to get into, in greater detail this week, some of the latest PPP guidance, and we've actually put together some examples which I think you'll find of interest. We're going to talk about the payroll tax deferral, the practitioner's perspective that I just mentioned, and then we're going to talk about the status of our PPP forgiveness tool, and then also share with you some news around an exciting launch of the .cpa domain. So we've got a lot to get into. So Lisa, why don't you kick us off just kind of reviewing some of the most recent town halls and our FAQs. So welcome, Lisa.
Thanks, Eric. I did miss last week's, but I watched the recording, and it was great. Lots of good insight on the legislative landscape from Senator Young from Indiana. Carrie Hipsack on the team made a special guest appearance, and I know that was a big treat for her faithful fans. And she went into some of the details of the interim final rule that talk about compensation and non-cash limits. If you are interested in some more details around the presidential memorandum on payroll tax deferral, we'll get into that today. But Ed Carl, our VP of Tax Advocacy, did a great review of that landscape as well in our August 20th session. And then you'll see some of the other highlights from the recent episodes, just in case you see a topic that is of interest to you.
Okay, so let me just take it back over and just talk a little bit about the political landscape. But before I get into that, we do feel that the month of September and October are going to be a very, very critical time for the firms to play the trusted advisor role with their clients. There is a lot of uncertainty related to what's going to happen with this next phase of business relief. And we also are aware that there are a lot of businesses that are hurting due to the PPP funding being used up and the needs for additional relief and needs to adjust their business model. So we do think that the firms are going to be working on the forgiveness process, but also playing a bigger role on understanding access to additional financing and capital, and providing their clients direction on where we see the next phase of business relief going. So what is being talked about right now? This first article here from the New York Times, small business failures loom as federal aid dries up. We are beginning to realize more and more what an impact the PPP program made over the past 4 months. It truly kept businesses intact. That funding has now dried up for many businesses, and there's a lot of bipartisan support to get additional funding. And one of the reasons is because businesses are hurting, as highlighted in the New York Times article. Mnuchin was testifying to Congress this week. He is urging more stimulus funding. And last week, Senator Young talked about how there is so much bipartisan support related to a PPP2 program. With that said, as Mark Peterson summarized, there is a very difficult political climate right now in the nation's capital. So it's going to be tough to get that bill passed in the month of September, but there is a lot of activity around trying to make that happen on both sides of the aisle. And finally, this week we're hearing about fraud in the PPP program. A few months back, there was a lot of discussion around some public companies in receiving the PPP loans. That attracted a lot of attention. There was also some reports in the early stages of the application phase of some fraudulent applications. But we've been saying since day one that there will be reviews of the PPP loans. That is occurring. The SBA is talking about that, and they've identified about $1 billion of potential fraudulent activity in the PPP program. So how we see that is, we think the firms are going to continue to play a very, very important role as the lenders start thinking more about that. And we're hearing from the lenders that they are receiving direction from the SBA to make sure fraudulent activity is not occurring with the PPP process. So let's real quickly talk about the status of PPP Phase 1 and these business relief discussions. The big unknowns related to PPP remain. Will there be a simplified forgiveness status threshold level? Will there be automatic forgiveness at, say, $150,000 level and below? Right now, there isn't any active legislative activity related to that. There's been discussions on it, but that's taken a back seat to the PPP2 discussion. So there's a lot more focus on getting additional business relief passed versus simplifying the forgiveness process. And also, this recent fraud discussion probably is going to slow down some of the discussions around this automatic forgiveness concept. So we're still in a wait and see mode on that. And we also are still waiting related to the question around the deductibility of a PPP expense if the loan is forgiven. Based on those two factors, we continue to advise firms to be patient and to wait to complete the PPP forgiveness application for their client, unless there's some type of event like a sale of a company that's requiring it. So now let's talk about a little bit more about PPP2. The HEALS Act is one of the bills that has some additional PPP funding in it. You also have the presidential memorandum. Senator Young did a great job of describing some of the why behind that last week, talking about that being done in many ways just to drive some legislation activity. The final comment that we'll make on this is, and we stated this last week, it's more of a question of when, not if. The question is, will we get a PPP2 bill passed in September, October, or is it going to wait till after the election? Senator Young said he was optimistic. I'm optimistic too. So, and the AICPA is also supportive of a PPP2 relief bill, and we are, encouraging policymakers to get something done as soon as possible. So, Lisa, with that, I'm going to turn it over to you. I know you and your team have been working hard on this portion of the update, and I'm sure many people are going to be taking screenshots of it and tweeting it out as usual. So, Lisa.
Thanks, Eric. So we didn't get any new FAQs or IFRs from the SBA this week, but we did get something from our AICPA expert panel on lenders, and they've provided some guidance on how lenders can consider accounting for PPP loans. So I wanted to put that up on the screen for you guys. Make sure you got the links to the resources. There's also a Journal of Accountancy article that you can look for to get these highlights as well. So we, just as a tease, in a couple of weeks, we've got Dan Knoll from our A&A team. He's just an amazing resource on all things accounting and reporting. So he's going to be joining us in a couple of weeks to get into some of the nitty-gritty on accounting issues. But again, if you're with a lender, or if you're working on audits for lenders, here's some guidance for you. As a reminder, AICPA members can always access the technical hotline for the accounting types of questions. So you've got a link there as well. Then if we flip over to one of our standard and favorite slides, this is the frequently asked town hall questions that Eric mentioned earlier. And we do have answers to a lot of your common questions in our resources that are available to you in the attendee materials for today. So you'll see the topic there, and then that'll give you a link over to the FAQ that you can reference there. We've got a couple highlighted that Carrie covered last week, and we're going to talk a little bit more about those today because they are causing a little bit of complexity and maybe some confusion. So we wanted to dive into those today. On the next slide, we have to show our hot tax questions. So I think Eric covered the landscape pretty easily, or pretty thoroughly, on status of legislation to allow deductibility. We're still working on that, but we've got to have a vehicle for it. So know that that is a priority for us. There's also a lot of conversation around filing a tax return in the middle of a PPP process. And there are several options to consider that, you know, the CPA firm should be discussing with their client. Waiting to apply for forgiveness until after your tax return is filed might be one option that the client wants to consider. So deducting those expenses on the current year filing, and then waiting to see what happens with the forgiveness determination in the following year. That gives you time to see if that deductibility legislation makes it through, or, you know, it may be a tax planning opportunity for you as well. Then we have some additional questions that we could use some guidance on. For me, one of the biggest issues is if a borrower is applying for forgiveness early, how does any FTE reduction work? So still looking for some examples there from the SBA that I hope we'll see. And then we had the IFR come out last week about related party rent, and just a question that's come up as we've all had time to marinate on that question and work through it is, you know, are there attribution rules that need to apply there? So we've got other good questions that we're keeping our eye on, but those are two of the hottest ones. All right, this eye chart is going to be your best friend. This is a resource that Brad on our PCPS team developed, and it is an Excel spreadsheet that basically provides a cheat sheet so that you can do a word search either by the category or the subject, or if you're thinking to yourself, you know what, in mid-April, it seems like something came out about such and such topic, you can actually search through this Excel file for the topic that you're looking for, and we'll give you a link over to the IFR or the FAQ document to help you there. So bookmark that. We do update it. So just keep it as a favorite, and then come back and check it as IFRs are added.
Lisa, it shows how long we've been at this. We now have a research tool. We got a research tool around IFRs and SBA FAQs, as well as our FAQs. So just fantastic.
I hid the 170 lines in between those two dates of April 11th and August 24th because I couldn't get it all to fit on one slide. But yeah, I wanted to make sure you guys could have a little visual reminder of how long we've been at this. Okay, so one of the topics Carrie covered last week was the IFR that came out about owner's comp and certain non-payroll costs, excuse me. So I wanted to dig into the owner employee compensation a little bit more. And you'll see the IFR guidance there. You've got a link to it if you want to get into what the exact verbiage is. But basically, if you're a C Corp or an S Corp, you've got a de minimis for applying the owner compensation limits now, and that de minimis is less than 5% ownership. If you're a partner, then there is no de minimis. You're still subject to the limitation of $20,833 for the 24-week period. So what I've done on the, so this is our refresher slide that is just a good reference tool. We updated it last week for the de minimis threshold, so you've got that just to refer back to in your materials. But then if we go to the next slide, I thought it would be fun to play around and bring in the Brady Bunch. So if you're my age, you might remember all the squares on the screen. I feel like that's the life I live these days with Zoom calls. So let's play along with the Brady Bunch. I thought they should probably own a grocery store because there are so many of them. I can't imagine what their food bill is. And I made them an S Corp just for fun. So I wanted to give you an example of how to apply those ownership percentages to their cash compensation in the 24-week covered period. But there's the caveat that you have to also look at their 2019 cash compensation if they're considered an owner employee. So if you look at Marcia, Marcia got a big raise in 2020 prior to that carried through to the pandemic. But the amount that's eligible for forgiveness is limited based on what she earned in 2019. So that's one of the caveats that you need to be aware of as you're planning to maximize your forgiveness. Bobby also got a big raise, but his isn't limited because he only has 1% ownership of the company, so he's not subject to that owner employee cap. If you look down there, then you can see that we apply the 24-week covered period max to anyone who has 5% or more ownership. So total compensation in the covered period was $330,000, but only $208 is eligible. So hopefully that'll give you a little bit of context as you work through some of the owner employee complement. We've also gotten lots of questions about related party rent. So again, just pulling out the language from the IFR, it's eligible for forgiveness if the amounts do not exceed the mortgage interest that the property owner paid during the covered period. And again, that the lease was in place prior to February 15, or the mortgage was in place. The borrower has to provide mortgage interest documentation that the property owner has paid back to the lender. So it gets a little confusing. And also mortgage interest payments to a related party are not eligible. So if you finance property through a related party, that is not deductible for PPP. So we'll do an example on the next page. And we've got Johnson CPA that has two owners, Andre and Zoe. They rent their building from Rainbow Real Estate, and Rainbow happens to be Andre's wife, but Andre also owns 10% of that company. So Johnson CPAs is paying $5,000 a month in rent. That totals up to $30,000 over the course of a 24-week covered period. RRE has a mortgage on the building, and their interest expense is $10,000 during Johnson CPA's covered period. So Johnson CPA's eligible rent is limited to that $10,000 that the related party paid in interest. If RRE had no mortgage on the property, there were no interest expense, then Johnson would not get a PPP eligible deduction for any of the rent paid to RRE. The IFR goes into some of the language about why the SBA and Treasury took that position, but unfortunately, don't shoot the messenger. We're just trying to interpret and give you some good examples to go with there. What we don't know is what if Andre didn't own any of our RE? So what if it was 100% owned by Rainbow? Would the attribution rules apply? And I don't know the answer to that question. So we're accumulating a new round of questions based on the guidance that's come out, and we'll make sure that we ask that one as well.
And that's one thing we are going to be next week. We'll be following up with Treasury with a list of questions. So again, the questions you're submitting to us today and the questions that Lisa and her team are assembling.
All right, so let's switch topics to the payroll tax deferral. And again, Ed Carl did a great job setting the landscape for us a few weeks ago, but this week, I think on Friday, we got some guidance from the IRS on how to actually implement the payroll tax deferral. Generated a lot of buzz and clarified a few things, but there are lots of other questions. So you've got a link to the news release if you haven't seen it. And basically, here are the facts. It's available beginning yesterday through December 31, and it is for the employee portion of Social Security tax. So that's 6.2%. The notice specifies that anything that is not withheld during this deferral period is to be repaid through Social Security tax withholdings January 1 through April 2021. Basically, what that means is that if an employee, if the employee taxes are deferred now, then they have to double pay them at the beginning of the year. The employers can choose to offer the deferral to their employees, or they can choose not to offer that deferral option to their employees. And the employer is responsible for the payment of any of the deferred amount. If they're not paid by April 30, then the employer is subject to interest and penalties, which can be pretty substantial on payroll tax.
And there's lots of questions here, Lisa. I mean, we got questions. And it was a Friday night. We're back to Friday night releases. So Friday night at 7 p.m. It's amazing how busy the government is on Friday nights. So here's the issues to consider, and I'm looking forward to discussing this with Carl and Dixie as well. But why don't you review this?
Yeah, absolutely. So some of the questions that we're hearing from small business owners, from our CPAs, from payroll providers who are obviously very interested in how this is all going to come about is, are employees allowed to opt out? So if an employer says, yes, I will offer this, then does an employee have the option to say, I'm good, I'm not going to defer my taxes because I don't want to be double hit early in 2021? The guidance was not clear on that. What happens if an employee leaves, gets fired? What if they're out on leave January through April, and so they're not there drawing a paycheck for the employer to withhold these taxes from? If the final paycheck is enough, then perhaps the employer can withhold all of that and recover all of that in the final paycheck. But what if there's not enough? There's no clear guidance from the IRS on how to resolve that issue. We're getting lots of questions about, from CPAs saying, what should I tell my clients if they're asking about this? From my perspective, the unpaid payroll taxes are such a significant risk for a small business owner to take on that you just want to make sure that they understand that potential liability. Make sure that they feel like the organization is going to be around so that the organization can repay those withheld deferred payroll taxes if needed. From our conversations this week with payroll providers, they are in the process of setting up their systems to allow for this deferral. But yesterday was the day, oh my gosh, it's the 3rd, 2 days ago, 2 days ago, this went into effect, and the payroll or the payroll providers we've talked to were not set up in time because the guidance came out, to Eric's point, Friday night. So it's going to be a while before they're able to offer it. Most of them intend to do the setup and do make it available. But in a conversation we had just a couple of hours ago, they were not getting a lot of interest from their clients on this.
Yeah, so Lisa, just because every week we are talking to all the different stakeholders, the payroll companies, obviously the firms are big stakeholders, and we're hearing from their clients. So right now, we have not heard any large company that has stated that they're going to move forward with this. The payroll companies are looking to put this capability in place, but as Senator Young said last week, this in many ways was done, this presidential memorandum, to drive legislative activity. There are some real questions out there that Lisa just shared, and based on that, what we're hearing from firms is they're advising their clients to hold off, to have patience, to see when to get the answers to these questions, and it doesn't seem like something that makes a lot of sense to do right now. I mean, I want to just bring in Dixie and Carl. Dixie, how have you been discussing this with your clients?
Yeah, we don't think it's a good idea really to do right now. From what we've seen, the recovery for those that are so affected is not going to happen so fast, and they're going to be in a real pinch. We think with cash that I think it's better to wait, see what other relief comes out, put it into a better, better state than owing that money later when they don't have it. I just think the penalties and interest and the risk of all of it is just too risky right now. I think about the way that we talked about rent negotiations for our clients, landlords, in terms of the deferral of that was not what we were going for. We wanted forgiveness for it. So if the payroll tax deferral were to ever become forgiven, possibly, which I'm not saying that it would, that makes more sense for us to say yes to that versus right now we would just say, let's wait for
That's
other.
great advice. I mean, absolutely. If it was going to be forgiven, that changes the game. Carl, what are you hearing from the small firms?
Well, I promise not to vent today, but what we're hearing.
Vent, Carl, go ahead.
Anyway, as you know, I don't support this option. But I'll tell you, small firms are raising the same issues. What happened? I was with a small firm networking group just yesterday morning, and this was a hot topic. And they're overthinking it. And it's like, I sit here and think about it, and they're all saying, why would we do this? And the bigger firms are, well, probably shouldn't do this, but here's what might happen. And then somebody starts thinking about, oh, maybe this would be good for my clients, but nobody could come up with a really good answer of why you would do this payroll tax deferral. And I think about, I look at these, issues to consider, and the one that says, make sure they understand the potential liability. Well, you can have these conversations with your clients and you try to make sure they understand it. I'll tell you what, with where we're at with COVID-19 and the impact, the uncertainty that companies have and clients have today, what about my professional liability insurance? I mean, I can tell them all day long, you have liability, but I think you better document that they know they have liability. I think there's a lot of unidentified consequences here that could happen that we're not going to like.
One other point is the employee has to elect to do this. So for a large company, just the administrative process of the employer reaching out employee by employee, and that would be an administrative process also for a small company. Right? Yeah, please do.
If I can make one more comment back on this one, Eric. If you think about here we are, September, and you can start doing it. You're in the fall season. You're almost into the holiday season. There are seasonal employees. Let's say they want to, right? Maybe they have this need for the dollars, and their employer allows them to participate. And then January comes around, and either they're not employed or the economy crashes for their industry. I just can't. It's hard to fathom the value of doing this when the risk is so great. that you're going, as an employer, have to collect that from somebody who really can't afford it. So,
well, we're going to continue into this practitioner discussion, Carl. I think we might have to encourage you to write a blog, get a blog out on this, and we'll get that posted to this community. So let's just discuss how the forgiveness process is working. Let's start with you, Dixie. How's your firm's perspective on where things stand with forgiveness? What are your clients? I mean, one thing we do know is clients are saying different things than firms are saying. And how are you managing all of this?
Well, sure. The hardest part is that most all of our clients want to get it over with. And that goes against our advice, which is to please, in all caps, WAIT, wait. And we see a lot of reasons why to wait, but at the same time, they really want to get it over with. So we just see that the changes that are coming are just too great to be able to predict, and the deadline is not for a long time. So, to calm their nerves about, we will continue to help them handle this over the time that it takes. There's no reason why to rush to apply for the forgiveness. In fact, if we learned anything from the PPP application, was that those who rushed in and did it wrong either didn't get the money right. So we're going to have, may or may not be forgiven. That's risky. And then also had to update it or change it, and then the rules changed. So within 10 days, how many times did it change? We see the same thing is going to happen because each bank is going to have a different application. Same thing with the PPP applications. And each bank is going to go through trials and errors. And so our advice is definitely let's let the trial and error process play out, wait till longer, defer that application for forgiveness, and expect that we'll be forgiven when we get there. Our major focus really at our firm in general with our clients is to give them visibility into their numbers. And so we're doing advisory with them in terms of what were you planning to have today? What did the numbers look like last year? What are the break even right now? And how can we make these funds go as far as possible? So that's really where we're sitting with our advice and what we're working on while we can.
Are most of your clients doing the 24-week covered period?
Most of them are. A few have elected on the 8-week.
Carl, what do you do when you're talking to the broader firms? What are you hearing?
Yeah, I'm hearing much of the same thing. Most of the firms are taking that wait and see attitude and wait and see approach but the clients are just pushing. They want to know where they are. They want to know what's going to happen. But you just you asked a quick question there about 8-week or 24-week deferral period, and it was interesting the other day that people were talking about the new updated issues on rents, related party rent and mortgage and stuff like that, has forced some of the people who are going to stay within the 8-week period to convert to 24 so that they can have a higher payroll allocation. So I find that kind of interesting. But clients want to know where they stand, and I know the SBA is supposedly taking applications, and there have been lenders who have been encouraging their borrowers to go ahead and start the process or give them get in the queue so they can process right away. But I think that is I don't know how many banks are doing that. I know there are some community banks that are actually now contacting the borrowers and say, you know what, wait. Not only do we think the SBA is not quite ready, but we also think, and this is the community bank saying this, that they think that there's going to be some other changes. And this kind of, I'm going to jump to your timing factors here for a second, because they're saying, you know what, there's going to be changes. There's going to be some automatic forgiveness. So why go through the process? We don't want to spend the time taking your application, nor should you be spending the time putting that application together if there might be automatic forgiveness. And we've talked about this before in other meetings. If the threshold was 150,000, or wow, isn't it like 86% of the 4.4 million loans that are out there? That's pretty high. I mean, chances are it's not going to be at that number, but why not wait for that automatic forgiveness clarification?
Lisa, is there anything you want to add? Just because your team's talking to the firms all the time. You talked earlier about the tax planning discussion. That's one thing, Carl, I want to come back to you on. But Lisa, would you like to add something to what Dixie and Carl have said?
I will add in that, again, based on our conversation with lenders today, they are they're really not in a rush to accept applications. They are confused about what the SBA is asking for. They're asking for clarification on what documentation needs to be submitted. And so they're asking for the borrowers to wait as well.
Yeah, and I mean, a lot of the national banks, they may be doing some trials, but they're really focused on mid to late September. So Carl, just back to you on the tax planning discussions as you look at this, and also Dixie, when do you think, if you could predict your cycle the way you want to do it, how far into 21 would it go? But let's just first Carl, just as you think about this from a tax planning opportunity.
Yeah, I have thought about it, and it's interesting. I think, thinking about my past clients I've had, it might be different what I might recommend for each one of them from client to client. But part of me is intrigued with the idea to consider and calculate and try to plan whether or not there's a value to go ahead and, let's go ahead and not apply for forgiveness by the end of this year. Let's we have our 10 months. Let's go into, to apply for that forgiveness. Let's go into next year, because maybe there's an opportunity here to take those deductions for this year for some reason, right? Whether it's, income tax, whether it's QBI and the impact, but be aware of the risk and what may happen in 2021 when you get the forgiveness. But I also would say there are probably a number of clients that may not get full forgiveness. So that planning opportunity is even greater and probably more necessary right now.
Dixie, so how's your curve going to? Where's your prediction curve on? And how many PPP applications did your firm do?
We did less than 100.
Okay.
So it's not I know firms that did a lot more than that. We're still of the mindset of wait, and we think and hope that things are going to continue to change. So I think it is a great, tax planning opportunity to make sure of that. And like Carl said, give them both options. We want to run the numbers really both ways and give them the options to make the decision and make sure they know about the risk of any of that.
Well, we already talked about the payroll tax deferral. We're gonna go to open forum in a moment and answer more questions after we cover a few more items. But let's just talk about item 2 here. And you talked a little bit about this a minute ago, Dixie, about how you're doing some scenario planning. But do you have some clients that actually need additional assistance, and you've said, okay, what's have you had the discussion, the likelihood of PPP2, looking at some other financing needs? How are those discussions going?
Yeah, so we advised our clients early on to apply for both the PPP and the EIDL, the 7B loan. And so not only did our clients get those PPP funds, but also a majority of those got the SBA EIDL loan as well. And so those funds are the ones that they are continuing to use to operate. I definitely think that businesses are going to need a relief package too. I just don't see how the businesses, especially that are affected now, how they can continue to survive on such low numbers. I mean, bookings rates, the participants that we see, I mean, they're down to 17% really of volumes. It is getting better a little bit, but the impact has been so huge that we see businesses definitely in desperation. And as those funds from not only the PPP, but also the EIDL funds start to run out, they're going to need additional funding sources. So we have taken a conservative approach for spending funds, and we're going to the break-even analysis and doing worst-case scenario planning to make those decisions to cut out as many costs as possible and to make the funds run as long as possible. So I think that the advisory piece of what we do at the firm is the most valuable thing, to show them the various options. If you keep going on this run rate, you're going to run out of funds in 8 weeks. But if you do things differently like this, it's going to be 16 or 24 weeks, or how can we run it out that way? And I just think that's the most prudent decision right now for all businesses. There's a lot of various ways to help them, with rent negotiations with their landlords was a big deal that we went through, and having those tough discussions, but showing the numbers to the landlords. The last thing I think they want to do is lose a tenant. So I think there's a lot of areas to hit, and you've got to do it on an industry by industry basis, especially, and also a business by business basis as well. Some of the most conservative businesses that have been in business for years, that went through these big disasters before, like the BP oil spill, or, in 2008, those are the ones that we've seen are the most prepared, and they are always the most conservative in cash. And so that's the perspective and advice we're offering them, is be very conservative, cut your costs as much as you possibly can, know your break even, and know that you're not continuing to lose money until we get into a more stable environment next year.
Excellent advice, Dixie. And we've talked about this in the past, in some past town halls. We're going to be highlighting some business planning tools, forecasting tools. There's a lot of tools that are available to firms. I mean, you've been a leader in the client accounting services area. In the next kind of phase of the client accounting services is really to get into this forecasting and planning, budgeting. It's never been a more important time than to do that now. So we're going to come back to both you and Carl after we just cover a couple more slides, and Lisa will be pulling questions from our attendees. We are continuing to advance the PPP forgiveness tool. This is based on the AICPA forgiveness calculator. If you haven't watched the video links, we've got a CPA firm demo video, we've got a borrow demo video, and all of the iterations that Lisa described earlier. We're working to have the PPP forgiveness tool be able to support all of the latest guidance. And what this tool is doing, it's helping us drive a common approach with the PPP forgiveness process. That's what we tried to do with the PPP loan application. As we worked with the lending community, we wanted to have a common approach to what documents were required when you applied for a PPP loan. We want to do the same thing for the PPP forgiveness, and also we think this tool is a good resource for firms to manage all of their different client applications. The base version of this tool has no cost. We are going to have some enterprise versions that have some additional capabilities that will be very, very competitively priced. And this is the output from this tool. It will fill out the 3508 or 3508 EZ and allow you to upload all the source documents and provide that package to the lenders. And yes, this question is probably coming in right now, that the lenders have their own platforms. Yes, they will. We're talking to some, but the lenders are going to require documentation, and this could be a very easy way to get that documentation to the lenders. So here's a chart that we've been showing on a weekly basis. It highlights the many different relief options. Dixie just described the idle loans. We are very eagerly awaiting this next phase of relief programs, which the AICPA is actively supporting in DC right now with the policymakers. Let me just pivot for a moment and just talk a little bit about a very, very important announcement that came out this week. It's the launch of the .cpa domain. This is a new restricted domain exclusively for the CPA profession. In your materials is a 6-page position paper that describes what these new top-level domains are. And the internet, like everything else, is evolving. In some ways, these new restricted domains are like internet, or some people are calling that Internet 2.0. These restricted domains have controls, there's added security, and there's verification of who is utilizing them. And you see some of the leading brands and entities that have launched top-level domains. And the AICPA was successful after a multi-year effort in being awarded the .cpa domain. And right now, we're rolling it out. And I'm going to quickly talk about the value prop and then talk about where we stand in this early, just give you a little bit of background about the early application phase for a .cpa domain. The three pillars of value are security. It has much better security than the primary domain that's in use today for firms, the .com domain, which does not have controls or the best practices related to security that we've put in place for .cpa. There's greater trust. There's a lot of bad actors online today that we all know about. A lot of phishing attacks, spoofing. We are verifying that only licensed firms and licensed CPAs can get .cpa. So this is going to dramatically decrease the likelihood of a phishing or spoofing attack for CPA to client communications. And finally, it's a great branding opportunity for the profession. So just a little bit about submitting your .cpa application. We actually have a full hour webinar coming up in mid-September on this, which you could attend. But the early application phase started on Tuesday, September 1st and goes to October 31st. So it's a 60-day phase. And the goal of this phase is to allow firms to leverage their existing digital brands. There is no advantage to applying today versus September 15th versus October 1st versus October 31st. You just need to apply during the 60-day period. And we've put in place a logic-based criteria and a process that's going to allow firms to obtain domains that are most consistent with their current digital branding. So we're leveraging best practices of domain launches. So you will be able to reserve your existing .com URL in the .cpa domain. And we're also encouraging you to think about other domains which would support your firm. This first phase is only for licensed firms. Starting in January, we will open this up to individual licensed CPAs. So a lot of information related to this is in that position paper, and we will be holding a 1-hour webinar in mid-September, and you can register for that at domains. You find information about that at domains.cpa. So Lisa, we've got a little bit of time here to address the many questions that are coming in. So I'm going to look at some of them, but I'll let you kick us off with a question from the audience.
First of all, I'll let you guys know that you and Carl are popular guests. You're getting shout outs about how real you guys are and speaking their language. So kudos to you. Dixie, we got a question in on the chat about how successful you've been in trying to negotiate discounts on rent for your client.
Sure. It has been all over the board. You know, landlords all have different situations as well as all of our tenants. And so depending on a number of factors, what we did was a lot of analysis in terms of scenario planning. And so I believe that showing the numbers is how you're going to get people to move and negotiate. And so showing the landlord what each of the sales were starting even in January, February, March, every single month compared to last year and even for over the years. To be able to show how growth of sales happened and then how the drop off happened. When you say that our sales are at 17%, and if we make this rent payment, we're giving 80% of our income to you, was a huge factor for the landlords to say this is not going to be able to last. And so we offered our clients the ability to do about 4 different options. Number one, if they were over what industry standards are and paying for rent and CAM, so let's say that they paid 15% normally of their revenue and they should have been at 7%. Those are the clients that were in the worst position. And those are the ones we had to negotiate the hardest because they're going to be the ones that go out of business. Our retail, of course, clients, restaurant clients, et cetera, were definitely the hardest hits. But when you show the numbers, the landlords were able to help negotiate. Most of them, we were saying, do not defer it because it's just like this time bomb looming, especially if you add it to the end of the lease. How are they going to be able to pay that? We just didn't see it as happening. And so some of the landlords abated rent for 3 months, and they went to a discounted model at 25% of rent payment. But if they paid all of CAM, so pay all of CAM, they went to 25% rent at least through the end of October, possibly even November or December. And we keeping those schedules up of those numbers, that if the income comes up above 50%, up to 75% or 100% of what it was last year and the prior years, that those numbers of rent payments go up as well. And that's what we've been successful to negotiate, a sliding scale per month based on the revenue that comes in the door.
That's great insight.
Hey, Lisa, there's a bunch of questions that came in on the payroll tax deferral. One is, how likely do we think this will be forgiven? We haven't seen a lot of activity the legislative activity on the payroll tax deferral. So that is something that the president has stated that he would like to see it be forgiven. So that is very unclear right now. So I think at this point, it's something that should be viewed as a potential liability. There's also a question on, if an employee says they want to take it, the employer doesn't offer it, what happens? Well, it's the Mnuchin said in testimony, it's the employer's option to do the payroll tax deferral. If the employer doesn't decide to do it, it will not be possible for the employee to elect. We haven't heard of anything related to doing this on a tax return. There's questions that came in. So Lisa, I'll turn it over to you in a second. There's a question that came in related to the new .cpa domain, the pricing. I meant to cover this. This is a professional restricted domain that we're doing verification. We've put in security best practices. This is quite different than the .com domain. There are other professional domains out there that are restricted like this, .bank, .pharmacy. The pricing that we were able to develop for the standard rate is $225 a year. That's far below the $900 plus for .bank and .pharmacy. But yes, that is obviously above the commodity pricing of a .com domain. But as I've said, it's a completely different service. So take a look at the position paper, and a lot of information related to the .cpa domain is at domains.cpa.
I'll tell you, Eric, I think that the .cpa domain is like a no-brainer. I don't think the pricing, me personally, if I was back in practice, I would jump on it. I mean, what would you pay to set yourself apart from everybody else that you don't have to do anything with? Once you've got it, you just have it on everything every communication piece. So anyway.
Yeah. And Carl, well, thank you. And the thing that what's really different is, phishing and spoofing attacks are serious things, and they cause lots of problems. On Shark Tank, Barbara Corcoran, she with her advisor, she experienced that somebody kind of faked an address, and there was hundreds of thousands of dollars transferred. They were able to recover it. But this is something that we will really be able to put a lot of steps in place to prevent, because what happens is these cyber attackers, or these people who do these phishing and spoofing exercises, they go register fake .com addresses. You cannot register a fake .cpa address. You have to be a licensed firm. There was another question about when can individual licensed CPAs apply, and that's going to be in general availability in January. So the first batch is for licensed firms, and then it will be available for individual CPAs that say are in a business and just want to have a .cpa domain, that they'll be able to apply starting in January. Lisa?
Thanks, Eric. So we got a couple questions about the PPP tool that Eric, you and your team have been working so hard on with Biz to Credit. And the question is there a functionality to allow clients to access the portal so that they can add some information, they can upload document, and then the CPA reviews and finishes the application?
Yes, I mean, I think I don't have all the particular functionality memorized, but this tool here is meant to be a tool that there can be collaboration between the CPA and the borrower. I know we have a lot of CPAs and companies out there on today's webcast. About 25% of the attendees for these town halls are CPAs that are in business and industry, and you absolutely can use this tool to fill out the application. And as I said, there is these collaboration opportunities for firms and their clients.
And those collaboration opportunities are in the enterprise models. So you've got the base platform, and then you've got enterprise functionality that'll allow you to consider those collaboration capabilities.
And I'll let the audience know one thing that we're thinking about. We are thinking about PPP2, and one thing that we're aware of is if this bill passes, say in the coming weeks, it's going to happen very fast. And there's the discussion that what they're going to leverage is the $100 billion plus that's available that was not utilized is part of the original PPP program. And we think it's important for firms to have a plan B. You have your lenders, your clients' lenders that they got the first loan from, and that's clearly something that I'm sure a lot of clients will leverage. But we're building a platform that will be capable to support a PPP2 program. So that's another reason we're thinking multi-part about how these tools now will become a critical element for the firms as they continue to support this business. Just like you've got tax tools and audit tools, you need business relief tools, and that's what we've been working hard at over the past couple of months.
Thanks. We've got a couple of questions. One is about related party rent, and I gave an example where the mortgage holder, the property owner, had a mortgage, and so there was some interest expense that the property owner was incurring. If there is no mortgage and there is no interest expense, then the PPP borrower does not get a deduction for the rent that they're paying to the related party. That's our interpretation of the IFR that came out August 24th. So another question that we got was when is the deadline for applying for forgiveness for PPP borrowers? There is no technical deadline to apply for forgiveness, but 10 months after the end of the covered period, the principal and interest payments on the mortgage or on the loan will become due, and the lender will start invoicing for the payment. So just a couple of basic questions.
At least I think that's a good place to end. So I want to thank Dixie McCurley and Carl Peterson. A lot of great comments coming in about the insights that you provided, and at least I think everybody is happy to have you back. Carrie did a great job as well, and your Brady. We'll see if we got any comments about your Brady Bunch example. So here are the resource. Here's the resource page, probably the most highly visited page on the AICPA website, AICPA.org/SBA. Lisa and her team work tirelessly to keep this updated. We also have a broader COVID. And I don't know if this is being shown right now. Are the slides being shown?
No.
So maybe we could throw the slides back up. Thank you.
Yeah.
So that I showed this slide regarding our resource center, AICPA.org/SBA, and we also have a coronavirus tax resource center, which has additional information. So our next town hall is going to be on September 17th. We always stand by to do a special edition if something critical comes out from the policymakers or SBA and Treasury. So always follow us on Twitter. We try to stay very active, both on Twitter and LinkedIn. My account, Lisa's account, the AICPA accounts. So we wish all of you a great Labor Day weekend. We have greatly enjoyed being with you. Now it's at times on this bi-weekly basis. What we try to do for each one of these town halls is bring to you the latest information from the many stakeholders that we're talking to basically on a daily basis, the Treasury, SBA, the banks, the payroll companies, and absolutely the firms and many thought leaders that support the firms. So thanks again, and look forward to speaking to you again sometime soon, and have a great Labor Day weekend.